So you want to own a home, but you have bad credit. Well, believe it or not, there are options. And we're going to talk about those options right now. So if this is the first time you've been to my channel, please subscribe, hit that bell, and then you'll be notified whenever I post another video. I love to keep you informed on what's going on, teach you about the real estate business, and educate you on things just like I'm doing today. But I also love to show you the city of San Antonio, the surrounding cities, what's out there, how much it'll cost you, what you will have access to in different areas and different parts of town. San Antonio is a beautiful city. It's my favorite city, and that's why I live here. But don't take my word for it. I mean, look at my videos and see it for yourself. So let's get into what we're talking about today. You want to own a home, but you have bad credit. So what are your options? Well, your first option would be to continue to rent, okay? You can just continue to rent and continue basically throwing your money down the drain. I talked to a young lady recently who told me she was paying $1,500 a month in rent. If you're paying $1,500 a month in rent, that comes out to $18,000 a year that you're basically donating to your landlord so he can pay his mortgage, right? If you do that over a 5-year period of time, would you believe that comes to
$90,000?
5 years, $90,000. That's way more than I paid for my first home that I bought when I was 25 years old. And it's just about exactly what I paid for the first home that I purchased here in San Antonio. It's a lot of money. That's a lot of money to just be throwing away. Equity is like money in the bank. I've been preaching this like John the Baptist preaches about Jesus. You want to buy something, whatever you can afford, and start to build equity. That's what my wife and I did. Our first home was a pretty nice home, but it wasn't in the most desirable neighborhood. I mean, it wasn't a bad neighborhood, but there was a lot of renters in that neighborhood, so people didn't care about their property so much. Kind of drove my wife crazy. And so she wanted to live in a nicer neighborhood. So we lived there for just a couple years, and we had enough equity to use for a down payment to buy a nicer home. And then we were there for a few years, about 5 or 6 years to be honest, and we actually were able to use the equity from that home to get into an even nicer home in an even nicer neighborhood. But you have to get the ball rolling by starting to own something, whatever you can afford, and then you build from there. Equity, equity, equity. I hope that this first option of continuing to rent, you are smart enough to see that that's not a good option, okay? So let's get to our next option. Number 2 would be owner finance. Now that's a pretty good option if you have some money, because an owner who's willing to finance a home for you is not really gonna care so much about your credit score as he is, can you afford to make the payments on that home, and do you have the money for the down payment? Now, owner finance is going to require a larger down payment. When you have good credit, you can purchase a home via an FHA loan, and that requires 3.5% down. There are other options that require 0 down. If you're a veteran, you can get a 0 down loan. There's something called USP, and that really applies to homes that are kind of outside the city limits usually, and you can get a 0 down payment loan for those homes. Well, if you're gonna buy owner finance, it's gonna require a larger down payment. Anywhere from 10% to 50% is what I've seen, okay? And I kind of cut my teeth on owner finance deals. When I got started in the real estate business, I helped a lot of people who had bad credit get into a home, but it takes money to do that. Typically, I was able to get them into a home for about 20%, maybe 25% down. So that means if you're wanting to purchase a $200,000 house, you're probably gonna need to bring about $40,000 for your down payment. And you know, you can do the math. If it's a $150,000 home, it would be a little less. If it were a $250,000, $300,000 home, obviously you're gonna need more cash. Get what you can afford and understand that owner finance is a temporary situation while you're building your credit. because once you get your credit score to a certain level, then you can go to a bank and refinance that home. You get a better interest rate. And guess what? That time while you were building your credit, you were also building equity. So when it comes to refinancing that home, you can keep it, you can sell it and get a nicer home. You'll have options there as well, okay? So that's our option number 2, owner finance. So what's option number 3? Option number 3 is let's work on your credit score. We have credit repair programs. Let's say you don't have $40,000, $50,000 to put down on a home. You've got bad credit, you don't have much money. Okay, then let's start getting your credit score where it needs to be. Contact me. I've got great finance people that I work with. We'll start working on your credit score and we can get that credit score up for you. At the same time, you can be saving some money. And there are also down payment assistance programs. So you don't necessarily need a whole lot of money because we can get you help with that as well. All right. So that's your third option. Let's work on your credit. Let's get you into credit repair and build that credit up to where it needs to be. It doesn't cost you anything. Credit repair is free. Guess what? Mortgage companies want to be able to sell you a house. And there are plenty of mortgage brokers, mortgage bankers who are willing to help you build your credit up to where it needs to be so that you will be in a position to buy a house. They want to be able to loan you that money. That's how they stay in business, is by loaning money. So if they have to help you get to the place where you can qualify for that loan, they're willing to do it and it won't cost you anything. But it's to their benefit, it's to your benefit, it's a win-win situation. So that's option number 3. All right, so keep renting, owner finance, which is gonna cost you a little more money down, or let's build your credit up and get you into a loan when you have your credit score where it needs to be. So that's pretty much it. I said this was gonna be a short video and I'm gonna keep it short. My contact information is always in the comments section below this video. You can call me, you can text me, you can even schedule a Zoom meeting and we can talk face to face about what it is I can do to help you become a homeowner. Till next time, take care.